Well, this is Pat Walker at MachineOwners.com. I'm doing a training coaching video for everybody. Every price and volume bar talks in a chart. And our job is to learn how to listen to it. It maybe sounds like a corny cliche, but it's a fact. Some bars are more important than other bars, but you've got to take note of them. It's also important to note the open, high, low, close on each bar. Example, this bar here, it gapped up. You see the open right there? And it closed just above its midpoint for the day. It wasn't that strong of a bar. It should have closed near the highs of the day. And it meandered around for a couple of days. And then it started to lift. Well, it has a nice base right here. It had great earnings, by the way. Great earnings. Earnings were up 317% before we bought it. You can see these clean tops. I drew that line. Note this. Note the volume pickup on this day. 910. Look at that. Slight volume pickup. Heavier than these down volume bars. Heavier than these two up volume bars. And so, boy, if it takes that out across these lines, that could be a buy if the market's good. Advance it a day, and look what it does. It lifts off and starts to run. We're buying it as it runs up. Look at the volume. People talk with their mouths and vote with their pocketbooks. They voted. They voted on this bar. Advance it one bar. It gaps up and goes up even higher. That's a plus. That's a plus. What do you do on something like this? Well, you take a look and see what the market's doing and say, well, should I stay with it or not, or should I sell a little bit? You could sell a little bit if you want, but maybe not. Advance it a day. You have a quiet inside day. The market at this time was acting a little sloppy. You take a little bit off, just in case. Just in case. It goes up a little bit more. This is nice. And again, I have to show you this. This is 912, 913, 916. I want to show you the spiders. The spiders on 912, 913, 916, dropping a little bit, flopping around. Go back to FNKO. So you sell some into strength, and you're in good shape. Everybody's happy. Looks great. And then it does this. It gaps down and drops on extremely heavy volume. Because we took a little bit off into strength, it helps lessen this. It means we made money, and when it drops below our entry price, what are we doing? We're selling the rest. We're not going to take a good profit and let it turn into a loss. We don't do that. By the way, the whole time we owned this, we weren't looking at any 5 and 10-minute charts. We're just letting it work, monitoring it. I will look at 30-minute and hourly and daily and weekly. That's it. Does this, heavy volume, you're out. And you can say, man, that's a bummer. Maybe it'll bounce back. I don't know the future. I live in the now. Inside day, less volume, nothing to do with it. And then it does this on a pickup in volume. And then it does this on even heavier volume. And then it does this today. So you manage it. You buy right. You're buying into this. You sell a little bit into strength because the market's sloppy. It starts to gap down. When it gaps down, don't round trip it. Don't argue with it. Get lighter. Get out. And you avoid this. Never let good gains turn into bad losses. This would hurt. This would hurt. I just wanted to share that with you, just some of the tactics that can help you. After 30 years of doing it, you pick up a few tactics that can help you. By the way, the whole time we owned this, we weren't looking at any 5-minute and 10-minute charts. I don't even know if we were looking at 30-minute or hourly. We just let the chart talk to us. I wanted to share that with you. I hope this helps you. There's education here. That's important. So thank you.